Okay, I am officially recording and we're going to get started now. Before we start, let's just do the disclaimer thing. So you know, everything we're doing today is just for educational purposes. I'm not giving any trading advice. What I'm going to be showing you is one of the strategies that we use. That's myself and Becky. Becky's my trading partner and also the co-host of this meetup. And it's how we approach trading the markets, how we profit from it, and the process and some of the techniques which we use. And we'll go through one very specific strategy, which is a part of a group of strategies. We don't just trade one thing. We trade multiple strategies to be able to catch moves from the top down, bottom up, and in the middle. All right. So today we're going to be going over an Ichimoku strategy. And that's using Ichimoku Clouds. Let's see, make sure I'm going to, if you look in the chat window, I'm going to put a link in the chat window for the handouts. So if you go to that link, you'll be able to download the PDF. You'll be able to find some recordings of previous meetups, and you will be able to find the trade listings of the option trades which have been valid over the last several years. There's a spreadsheet there, and that has a very detailed trade listing of everything that's been valid and has either reached first targets or expired worthless through the end of July. So that's a very updated spreadsheet on that link. And for someone asking, who did do the Amazon covered calls? One of the very first person who I trained to trade was a coworker, Steve, and he trades Google. I showed him how to trade Google with covered calls and buying shares, and also Amazon with covered calls. And he's the only person I've shown that to over these years. Myself and Becky learned it from another organization, how to do it inside out, up, down. It was just detail intensive training. And we use that knowledge. So I'll share that with just a very, very, very few other people. All right. But before we get into the strategy, let's go ahead and take a look at the big picture market. And I want to show you what's going on versus what how they try to scare you on television and stuff like that. All right, SPY. Okay, what you should be looking at right now is the Thinkorswim chart. This is the S&P 500 monthly chart. This is a monthly chart of the S&P. Where I have the crosshairs right now is 2004. The blue dotted line is a 40 period simple moving average. Okay. I always look at big picture, because when you look at big picture, then you get a really good visual of what's going on versus what they tell you on TV, because they try to scare you on TV by telling you what's happening today. They don't look at big picture because it wouldn't be news. If you looked at big picture, nothing's happening. If you look at today, market's going crazy. They try to scare you. They try to excite you with what's happening today. When you look at big picture, there's literally no news. Okay. So this is 2004 markets trading. I can only go back 20 years on Thinkorswim. On my other platforms, I can go back further, but 2004, we're trading above this uptrending 40 period moving average. This is the S&P 500. I'm looking at SPY. All right. Every couple of years, it pulls back. This was that debacle in 2008 when the market just got crushed. Okay. And this is the rally in 2009 as the market got back above the 40. Okay, so here we are in 2010. Now this is the bottom of 2009. We're now in 2010. Market's back above the 40, and it's basically stayed there all through now in a massive, massive uptrend. Monthly chart. Every couple of years, not months, years, the market pulls back to the 40. This is 2013, 2014, massive uptrend. Pull back in the end of 2015. Pulls back to the uptrending 40. Said every couple of years you got a pullback. 2018 pulls back to the uptrending 40. All this time, during these months, they try to scare you every day. It's like, oh, the market's going to zero. The market's going to zero. Everyone, we're going to lose all of our money. No. It's just regular basic market movement. And we have the periodic pullbacks to major support. But you'll never see a picture of this on CNBC or MSNBC or Bloomberg, because they have to show you what's happening today, what's right in front of your face, because that's where all the excitement is. Okay, that's what they want to talk about when the people come on. They want to talk about what's happening right now, and it's the volatility. Market's going down. It's down 1,000 points, up 1,000 points. That's why we don't focus on chatter. We don't focus on any of that stuff. It's purely technical trading. When we get our buy signals, we take them. When we get our sell signals, we trade them, take them. What people say is irrelevant. All right, so we keep going. 2020, it pulled back for a whole month and right back above the 40 the next month. Okay, people here were saying the world is shutting down, the virus, everything. The market's going to keep going forever, down and down and down and down. You have to really look at the big picture and filter out all that noise and realize that's not the case. So we got a few more people coming in. Becky, you should take care of that. All right, and we keep moving on, right back above the 40. And we keep going. Now we're into like a month ago. This was June 2022. The market pulls back to the uptrending 40 as it was coming down. Once again, the world is coming to an end. There's a war in Ukraine. There is this, there's that, there is inflation, there's everything else. No matter what the reason is, every month we'll have 4 numbers. Every day we'll have 4 numbers, an open, high, low, and close. Okay. So, and the market will still move in a nice, orderly manner when you look at it from the big picture. If you look at it day to day, minute to minute, it's all over the place. All right. See, there's a couple of people waiting to be admitted. Becky, can you grab those people and let them in? Or are you out? Hang on a second. I think she was out. Okay. All right, so, and here we are now. This is end of July 2022. The rally continues. Once again, big picture. This pattern hasn't changed in 10 years, okay? We're in a massive uptrend, big picture. If you go to smaller time frame, sure, daily might be all over the place, up and down. But if you look at big picture, we're in a massive, massive, massive uptrend. That's why I like to show this at the beginning of meetings, because when people are telling me, should we protect our investment? Should we go to cash? I'm like, no, you should buy stuff when it gets down to support. That's what you should do. That's the optimal buying point. And we've had many, many, many buy signals in the last couple of weeks, most of which have hit targets. All right. So we have just long is still in place. We have some shorts on a shorter time frame, on a daily time frame. We might have some long and shorts, but big picture, we're still in massive uptrend rally mode. All right. So I'm going. Do we have any questions about this before I move on? All right. I'm going to switch charts now and go to the daily. Let's see. Okay. And since I use IWM as an example, we'll look at the IWM chart. All right. So now I'm going to go back to the trading plan real quickly and change the share. Back to the trading plan and the outline. All right. We're going to look at Ichimoku Cloud, one of the strategies we use that we trade using it. I don't care about textbook definitions of an Ichimoku Cloud. Anyone can go look up at Ichimoku Cloud and you'll get a textbook definition that says when you're above the cloud is bullish, when you're below the cloud is bearish. Textbook definitions. The Ichimoku Cloud consists of 1, 2, 3, 4, 5 lines, and the cloud and everything is just a tool. A tool can be used for many, many, many applications. All we see it is as a tool. And the strategy I'll be going over is one of the ways we apply that tool for our trading. Okay. So Olga asked a question. Good afternoon. What was the bottom indicator on previous chart? That was an ATR. That was ATR on the bottom of the chart. All right. So I'm going to, in here is an example just for an image, but I have to go back to the chart and we're going to go over all the details of this strategy. It's the Kumo buy, K-U-M-O. And so you're going to, I'll reference these names, Kijun, Tenkan, Senku, and Shiku. All right. And the Kumo is the cloud. All right. So I'm going to go back to the chart. And if you get lost along the way, ask a question. Don't raise your hand. I will not see it. Just unmute, ask a question, or type it in, and then I'll be able to see it then. Okay. What about Q? I'll go with an easy example to see so everyone can really understand it. The example I'm going to use will be the QQQ, NASDAQ. All right. All right. The cloud, the Kumo. This is the bullish cloud. This is the bearish cloud. In a bullish cloud, this is Senku span A. This top line is span A. When it crosses, and the bottom line is span B. There's a span A, span B. On the bullish cloud, this top line, the top edge is span A. The bottom line is span B. In between is the visual we call the cloud. So when the lines cross, it just creates a visual imagery. This is the cloud in between. When span A crosses below span B, we have the bearish cloud. So now this bottom line is span A. So this was span A, this top line. When it crossed below span B, it's now bearish. So this bottom line is now span A, span A, span A. Crosses back above, and now we're in a bullish. So this is now span A. So it just crosses below and crosses above. Okay. So when we cross below, we're in a bullish, bearish cloud. When span A crosses above B, we're back into a bullish cloud. All right. Any questions on that right now? Okay. We're not going to get ultra detailed, anything super complicated. I want you to understand the concept. That's going to be the main thing. When I'm on one-on-one coaching sessions with people, we get into more details, but I want you to understand the concept. All right. So for this particular strategy, what we're looking for is for price. In this case, the price of the closing price of the QQQ to close above the Kumo, above the cloud. So if we see price came in and below the cloud, and then it came up, and on this day, it closed above the cloud. If you look at the data box, this top line is span A. The value of span A, look at data box on the left side, is 374.93, and the closing price is 375.47. It closed above this top line. That's what we're looking for visually. Now, the previous 4 days had to have closed in or below this top line. So this day, one day closed below the top line. This day closed below the top line. This day closed below the top line. And this day also closed below the top line. So that's what we're visually looking for. So when you're doing review, you can either write a scan to do this automatically to find this setup, or you can just look for a close above where the previous 4 days closed below span A. That's the visual we're looking for. Close above, previous 4 days, close below, okay? Now, I use a setup, trigger, and trade management terminology, which I applied from learning from Jake Bernstein, okay? You use setup, trigger, trade management. What I just described was the setup. That's visually what we look for, and you can write a scan for that. All right, Ichimoku Cloud is free on every single analysis platform. Every broker's platform that has charts has Ichimoku Cloud. This is available any place, and it's free. All right, so you got the visual, you got the setup. Now the trigger. Yeah, hang on a second. All right, now the trigger. The red line on the chart is the Chiku. The Chiku, I got some stuff happening on my computer. All right. The Chiku is this day's closing price shown on the chart 26 days in the past. Why? I don't know. I didn't create this tool. I'm not a mathematician. I just know how to utilize tools that really smart people have created for us to use. I didn't create all these indicators. Other smart people created these indicators as tools for us, and I'm really, really good at utilizing the tools that have been given to me and finding ways to apply them to make money in the markets, and how to filter out bad trades and focus on the good ones. So my confirming trigger is the Chiku of 26 days ago has to be above the Kumo. The cloud is the Kumo. To be above the Kumo, it has to be, the Chiku has to be above this purple line, above the span A. So I go back, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26. 26 days ago, here is the red line. That's the Chiku. The value is above the Kumo 26 days ago on this day, okay? And if you need to see the actual number, you look in the data box. The Chiku is 375.47 and span A is 363. All right, so it's well above, okay? That is my confirmation, and that is the only confirmation I need for this trade, okay? I know, because I have my stats, that if I place a trade, I over 85% of my trades will be winners with a given size target, because Becky maintains the stats. Anything you see in a rectangular box, that's been done by Becky, okay? She maintains the numbers, and everything we do is based on knowing the numbers, knowing our numbers and stats. We need to maintain 85 to 84 to 90-something% winning trades on options. That's how we make money consistently, by maintaining that very, very high win percentage. Okay. And I'll show you a spreadsheet in a little bit that gives an even better picture of how the numbers and money adds up. Because with options, you don't know how much you're going to make. You have no idea how much you're going to make, because you got all the variables of the Greeks, time decay, all the delta and gamma and theta. You don't know. All we know is that given a certain amount of time in the option and given a certain magnitude of movement, we expect the trade to go our way prior to expiration, a certain magnitude of movement. And if we price our options appropriately, we can just buy calls and puts. It's not like stocks where we have to deal with implied volatility. The ETFs have real low implied volatility, so theta doesn't become as big an issue as stocks do, okay, with volatility. All right, so this is our signal day. This is what we call our signal day when we have a valid trade. So we had a close above the Kumo. Previous 4 days closed below the Kumo or below span A. And we have a confirming trigger with the Chiku above the Kumo 26 days ago. All right. I look at my stats and I see it's 80-something% wins, over 84% wins. What do we do now? Now, what we know is that on this day when we had the close above, take a look at the data box, the ATR was $4.60. Okay. I need someone to pull out a calculator. All right, someone pull out a calculator. I'm going to ask you to compute some numbers. Our entry price for the trade, we're going to be buying calls the very next morning at or below the open price of the ETF. The next morning, the ETF opened at 375.94. So assuming a strike every point, we're going to buy the 375 strike option. Okay. The next morning, we're buying the 375 strike option. Yeah, 375. That's what it opened at the very next day. So we're going to get in at a strike that's in the money, first strike in the money. Now, on the signal day, the ATR was $4.60. Someone with a calculator, what is $4.60 added to the open price the next day? The open price was 375.94. The open price is 375.94. What is 375.94 plus $4.60? What is that number? 375.94 plus $4.60. Okay, Olga has 379.68. That is going to be our first profit target. I'll show you in a little bit an example of the stats and how we have the win-loss stats for different size targets. So you can make it, that's for a 1 ATR target. We also have stats for 1.5 ATR and 2 ATR. So you can make an educated decision how big a first target you want. However, the bigger the move you want, the lower a chance it is expected to get there before expiration, okay? The conservative trade and the smart trade is to go with the 1 ATR target, all right? So according to Olga's calculation, our first target is going to be 379.68. Now, you could have entered this, here's the date was valid. You could have entered that trade anytime this day when the price was below the open. You could enter it at 373, you could enter it at 374, as long as the price of the ETF, you could enter it the next day, or the next day, or the next day, as long as it's below the open price and you haven't reached the first target yet, okay? So if we had gotten in at, instead of getting in at 379.94, if we got in at 374.94, 1 point lower, then our target can now be $5.60 rather than $4.60. By getting in at a better price, you have an edge, you have more of an advantage. Now you can actually get a bigger profit objective, okay? A lot of flexibility how we trade, okay? So when did we reach that target? The target is 379.88. So the high this day is 377, high this day 376, high this day 378, high this day 382. So on this day, we reached our first profit objective. So this trade would have taken 1, 2, 3, 4, 5 days to reach our first profit target, okay? When it moves that quickly, you're looking at a 20 to maybe 30-something% return at the first profit target when it moves that quickly. Also depends on what you paid for the option and how efficient you were and option pricing. About 20 to 30-something% return to first target. If you want more, you have to do more work. And what I mean by more work is that, okay, you got your money here. If you want to catch this move, then you have a choice, and it all depends on your personality, your financial situation, and your lifestyle. You might be someone that doesn't want to deal with managing a position. You don't want to deal with that at all. You don't want to be keeping track of what contracts you have open and trailing stops, in which case you exit the whole position at the first target, grab your 20 to 30% return, and you move on for your next trade. Okay. However, if you want the most out of these trades and you really want to maximize profits, it's really a good idea to not exit your entire position at the first target. It does require more work day to day to trailing stops. So let's say you had 2 contracts. You sell 1 contract at the first target as an automatic order. Once you buy an option, there is no sitting in front of the computer, looking at the market. There's nothing to look at. You enter your order to sell. Let's say you have 2 contracts. You enter an order to automatically sell 1 contract when QQQ reaches 379.88. That is, or 68, 379.68. You put an order in to sell 1 contract when QQQ goes up to 379.68. Good till canceled, and you go live your life. There is no sitting in front of the computer. This is not day trading. You only have to look at the computer long enough to get your order filled, and then place your exit order and go on with your life. Your analysis is done after the close. There's no analysis being done when the market's open. So you can do this anytime the market is closed, anytime from 1-something in the afternoon until 6-something the next morning is when you do your analysis. And if you do it the way I show you how to do it, it goes really fast. And I also have a service where I do email out the trade candidates each day. So that also helps people with their analysis to trim it down really, really fast. All right. So a trade like this, where you are trailing a stop, you might catch 20% overall at the first target. But because you're trailing a stop on the remaining contracts or contract, depending on how many you have, you might get an overall 60, 70, 80% return on the trade just from a quick move like this. Because since it never really pulls back to stop you out, because you do have a trailing stop each day. If let's say you bought an option for $4 and the next day is worth $5.50, at the first target is worth $5.50. You put a you sell one half of the trade, you lock in profit, you move your stop up from 450 to maybe 5 something. From let's say you paid 4, you move your stop up to 450, 475, and we go through that also exactly how to do that. And the market goes up, and now instead of being worth $5.50, it's now worth $6, and now you move it stop up some more. The next day it's worth $7, you move your stop up some more, and you keep trailing that stop up to lock in more and more profit on the option. So all of a sudden you might have had a 20% return at the first target, and that's how much money you made on the first contract. But in the second contract, you might double your money on the second contract. You might get an 80–90% return on the second contract, meaning making your overall return on the entire trade 70–80–90% or even double. Some of these options can double really fast when the remaining contracts keep going. But the bottom line is you lock in profit at the first target, trail stops in the remaining contracts. Because these moves happen several times each year and we never know when it's going to be. So we treat every trade the exact same way. And they'll happen in bunches. When a market's moving like this, it's not just the Q, there's going to be multiple sectors all moving the same way. And we'll fine tune exactly which sectors to trade, which are optimal for your particular situation. Not everyone can trade everything. And a big part of that has to do with money. Someone with a $10,000 account cannot take the same trades as someone with a $100,000 account. It doesn't work. You trade depending on the time and volatility. One DIA call, the Dow, that might cost $1,500 for one call contract. If you have a 10 grand account, that's too big for your account. If you have a 100 grand account, it's just right. Okay, so if you have a 50 grand account, it might be okay too. So it all depends on your account size, what you can and can't trade. And I'm going to go through our list of things we trade and give you an idea for what you can and can't do on things available to you to trade. Any questions so far? I want to get an overall picture and then show you exactly some more details as to how we go about making our decisions about things. But about this setup strategy, any questions so far? Feel free to unmute and ask whatever you want.
Hey, Ev,
Yep.
is this different from Bollinger Bands?
Yep, this is a completely different strategy. So,
okay.
Yeah, so when I work with you, you will be seeing 2 different charts, which includes this one and one other chart. The other one will have all the Donchians and Bollinger Bands on it, and this one will be different. So you'll be seeing some different stuff.
Okay.
Cool.
Hey, you briefly mentioned set up a scan for the 4-day below the span A and then the 1 day above close.
Yeah.
How do you set up that scan?
It depends what platform you're working with. I use Profit Source for scans, so it's just say on Profit Source, all I do is say, today price closed above span A. Yesterday price closed below span A. 2 days ago, price closed below span A. 3 days ago, price closed below span A. 4 days ago, price closed below span A. And 26 days ago, the Chiku was above span A. That's my whole scan. That's literally it. So whatever platform you are using, you write the equivalent scan that details exactly what you visually want to see. So if you're on Thinkorswim, that's, I believe, is doable. If you don't know how to do it, you got to talk to the Thinkorswim people. But myself and Becky, we use Profit Source for that. We've been using Profit Source since 2006 for our scanning. And we use that for all the Ichimoku scans, plus several others. What is the name of the strategy you use that indicates the name of the chart? What is the name of the strategy you use that indicates the name of the chart? I'm not sure what you mean by that, Olga. Name of the strategy you use, it indicates the name. I'm not sure what you mean. Can you clarify? Can you unmute? If you want to talk and clarify, or type it in, but I'm really not sure, or email me later on, or call me later on. But,
Do you hear me?
yep,
Okay, so the way that we receive, look, when we receive your email, it usually refers to the strategy, like it could be the bull strategy, bull future strategy buy.
yep,
And then we go to the description of that strategy, and it tells us what chart.
correct.
And my experience is that what would this chart be called?
You should have this chart on TOS. It says Ichimoku something. I'm pretty sure you have this grid. You have the Ichimoku.
Oh,
grid and
yeah, I do, because I recognize it.
yeah,
But,
so
yeah.
that is this one, the Ichimoku grid.
okay, okay.
You may or may not, you have one for NinjaTrader also, but for the Ichimoku stuff, TOS is better because it gives you the actual value of span A. The NinjaTrader one doesn't give you the actual value of this upper line, and TOS does. So TOS is going to be better for this particular strategy.
Oh, I didn't realize that.
Yep.
Thank you.
And that's the reason I'm using TOS this afternoon rather than NinjaTrader, because we can actually see the numbers, the numerical value of the lines.
Okay, thank you.
All right, cool. All right, so I want to give you guys a feel for more of the process we go about and this how we decide on what to trade and exactly what we look at. So you should be seeing, this is a Word file here, but I put some stuff in here so you get an understanding of what we do and how we go about it. These are the sectors which we trade. We trade multiple strategies. Our core group of strategies are 6 strategies, okay? The one I just showed you is like a bonus one. This one, it's one of our oldest strategies, still tradable. Some people still trade it. Becky trades it, a few other people trade it. It's one of our legacy ones. It's been around forever. It's one of our best ones. It still works great. Anyone wants to trade it, just for my current coaching clients, just email me and I'll send you the details and a full stat, see if you don't already have it. So we got a Dow, emerging markets, gold, everything. You can read this yourself. German markets, oil, real estate, industrials, tech, healthcare, oil again, retail. So these are all different sectors we trade. I know some people, they don't like certain sectors. They just won't trade them for their own personal thing. But it doesn't matter what the stats look like. They won't trade it. That's okay. There are probably 20 to 40 something potential trades each month, which are valid. And it's up to you to, realistically, you want to be placing at least 10 to 15 trades a month. At least 10 to 15 trades a month is realistic. You can't place 30 something trades a month. You'll get messed up with complexity. You'll make mistakes. So 10 to 15 trades a month is realistic and workable. All right. So scroll down a little bit. This is an example. Every detail is not in this plan. This is here so you can see how a trading plan is structured. The first thing when we see a trading plan, you're going to see the name. You're going to see what chart template to use to put onto the, so you can actually see all the indicators and strategies and also the indicator settings. We do all this for you. We give everything to you pre-set up for both TOS and or NinjaTrader. It's all done for you. You don't have to do any of this stuff. You don't have to type any of this stuff in. It's all set for you. But in the event you have to recreate the charts manually, that is why we include indicator settings, because you may have to recreate stuff manually at some point in time. All right, so if you do, you have the exact settings to use. Otherwise, you'll be emailing me, what's the setting for this? you might want to change platforms to put it on something else where you have to, and you don't want to use Toss anymore. You don't want to use NinjaTrader. You want to use something else. Well, that's okay. You just have to set everything up manually with the exact same settings as you've been using. So that's what is shown here. But I will give you everything needed for Toss and NinjaTrader. The setup, once again, setup trigger trade management. A setup is visually what we look for. This is for a Donchian setup. So it'll tell you, does it look for two lines crossing? Most of our trades will involve two lines crossing or something crossing above a line or below a line. So it's very visually easy to see, okay? So it's gonna be a setup and a trigger. A trigger is something on the chart that confirms the setup. This is what improves our statistical expectation of profitability. A setup alone might give us something that will create 65 to 70 something % winning trades. The trigger is what will take 65 to 70 something up to 85, 87, 88%. A lot of people, when they see presentations, they don't realize the presenter isn't showing them everything. The presenters usually show them just enough to be interested, not all the details, okay? There is more than just like a candlestick pattern or something, or two lines crossing. It's not, well, the 50 crossed the 200. No, there's more than that, okay? And that's the trigger. So you're gonna have a setup, which is the visually, okay, two things cross, great. Now what? I need something to confirm it, to filter it down so that I have something I know statistically will give me what I want in a given amount of time and will move a certain magnitude in my direction before it goes the other way. And then this is a real simplified sentence. This is what I spend most of my time on with people, how to actually trade. The setup is easy. The trigger is easy. This is how you actually make money, is with trade management. You don't make money by seeing two lines cross. You make money by knowing what to do after you see the two lines cross. How do you position size? How do you select the option? What strike, what expiration? How do I trade size? How do I scale into a position? How do I scale out of a position? Okay, that is what I spend my time with you on. And that is going to be the brunt of, that's how we actually make money. If we don't make money by watching two lines cross, that's silly. You make money by actually knowing what to do. You actually have to know how to trade. If you don't know how to trade and exactly what you're doing, the technical analysis alone won't help you. You actually have to know what you're doing, okay? And so that's what I work with you on, to actually know what you're doing. I believe in the old teach you how to fish thing, so you will always be able to feed yourself type thing. When I work with people one-on-one, I don't lecture. Right now I'm lecturing. I don't do this one-on-one. One-on-one, I will lead you. You will have to think. You will have to answer questions. I will lead you, and I will help you along the way as I'm leading you, but I will not be lecturing to you, okay? I expect you to work. I expect you to do your homework, to do the studying, to get certain background knowledge so that you understand the terminology I'm talking about. And then as we talk, then I can go into detail to explain and clarify. But I always need you to have done some basic background work. So if I'm talking about open interest, you have heard before what open interest is. If I'm talking about delta, you may not know exactly what it is, but you have heard the term before, you've seen something about it, then I can go in and elaborate. So I'll need to know you have some basic option and knowledge, and then I just fine tune it, and then we get into it. All right, so I'm going to keep going on this just so you see this process. This is what our stats look like, okay? This is for one of the strategies, a T-line buy and sell. if you see it in the light blue, that means for that particular ETF, for this particular size target, one ATR target, one expiration cycle, 2 expiration cycles. I'll go back to the chart in a little bit. I'll show you expiration cycles, but that's basically from expiration Friday, which is the 3rd Friday of the month, until the following month's expiration Friday is 1 cycle. This lets me know how much time I need in the option. If I was trading IBB, okay, this is like biotechs, pharmaceuticals. I know that 1 expiration cycle of time will be inadequate for my option. I need 2 expiration cycles of time for that option, because at 70-something%, that is too low, well below our minimum 84%. I know that we need to get a 2 expiration cycle, so I know how much time I need in the option. Okay, this is how we make money. Becky is the one who maintains all of this for every strategy. The higher the percentage, better off it is for you. Don't try to trade everything. We'll fine tune it. Maybe we have 28 ETFs. Maybe you want to trade 10 of them, and I'll work with you to fine tune which 10, because it'll be 10 based upon, number one, your personality, time available to trade, and also financial situation. You can't afford to trade everything, but there's an ETF priced right for everyone, okay? So we just have to fine tune which one is right for you, and we get a minimal grouping that's appropriate for your trading size and your own personal situation, all right? So this is one strategy, or actually 2 strategies, the buy and the sell. This is the same strategy on the sell side. So this was the long side of the T line, okay? So you see 93% wins, 89% wins, and it sometimes gets pretty high, as long as you follow the rules. This is only applicable if you follow the rules for placing and managing the trades. On the short side, if it's in light blue, over 84%. These are short trades. Another one of our strategies, all right? If it's in light blue, so you have the stats for 1 expiration cycle and 2 expiration cycles. If you don't see stats for bigger targets, it means that as the target got bigger, the stats got too low, all right? This is one of our favorite strategies for buying market bottoms. This came up valid on almost everything this last couple of weeks. We had like win after win after win after win in the last 2 weeks. Okay, we basically caught the whole rally up on everything. All right, so this is an Ichimoku strategy that we've been using forever, and we still use it. It's for market bottoms, and this hook strategy has been great for us. And anyone called the current coaching clients on the meetup right now, you should have seen this one come up multiple times valid. And a lot of these trades are in play. Already hit first targets and then some. This is our strategy for shorting. This strategy will basically short every market from at the top. You will find the top of every single market with this strategy. I'm not even joking about that. This will get you in at the top before price starts dropping a lot and volatility goes up and the puts get really expensive. This is still my favorite shorting strategy because it catches market tops. You don't want to trade everything once again. You narrow it down to 6, 7, or 8 ETFs that represent multiple sectors, and whenever they come up valid, you short it. Because you never know which will be the big trade. So you take every trade you can possibly afford, and because like I said, you never know. When we caught all these trades hit in 2020, when the market got crushed, this literally at the first targets, we were up 60-70% at the first targets. We were doubling our money at the second targets and then some, because they kept gapping and gapping and gapping. The volatility was just so massive. This strategy was our biggest winner in that first part of 2020 when the markets just got crushed for like a month or so. Okay, this was the strategy. So And then we have the weekly chart strategies also, similar results. And a weekly chart strategies you look at once a week rather than day to day. You look at these on the weekend and that's it. All right, so how we look at things is you look at the chart, see what we think is valid with a setup and trigger. We look at the stats to make sure the stats are 84% or higher. And so that's how, and then we go, I'm going to go back to the chart now, and then we'll take a look at this and take on some questions. So QQQ charts. Okay. This strategy comes up valid time after time again. And you just have to, I'm gonna make it a little bit tighter. See the last time it became valid. See, this closed above here, but the Chiku was not above the Kumo, so it would not be valid. We may have something else valid coming up because this is like now, we might have something else valid, but not this strategy. Okay, we have other things valid, not this strategy, but we just closed above, but we wouldn't be taking the trade with this one. Becky, do we have any Kumos valid recently? Are you aware of? Did we get any valid Kumo buys recently? Kind of doubt we had. I know we had a Senku, but I'm not sure if we had any Kumos. See this trade here? It closed above, previous days closed below, but the Chiku 26 days ago was below the cloud. This is what keeps us out of the bad trades. The Chiku, Ichimoku is a great strategy when done this way, when you have very specific confirmations and triggers. So we got to close above, valid setup, previous 4 days closed in or closed below the span A. So you got a valid deal here. Excuse me, span B or A, it's closed below. But when you look for the Chiku 26 days ago being above the Kumo, not valid. So keeps us out of bad trades. That's why we have that as a filter, that trigger. Here's the one we looked at before. We go back. You usually get some pretty big moves off of this strategy. Because we have other Ichimoku strategies, like here's the Senku. We have multiple, even when the two lines cross, that's also one of our strategies, that's a Senku. So we catch some really big moves off of this. Here's another Kumo trade here. Kumo trade closed above, nice big move 26 days ago. Closed above, previous 4 days closed below 26 days ago. Chiku above the Kumo. Pulled back for a couple of days and took off. Then we have another valid trade. So here was one valid trade here, and then another one became valid. So you're gonna have two trades in play at the same time. So you're gonna have multiple trades going on at the same time on the same symbol. And then it just took off. Cha-ching, cha-ching, cha-ching. Okay, we don't, time decay doesn't hurt us as much on ETFs as they do on stocks because of it so much less implied volatility. I have a question. Was the Ichimoku Cloud strategy for options only, or does it apply to futures as well? For the Ichimoku, we're only doing that one for options. And we also have one for shares. So for buying, we have a strategy for shares and for options, but pretty much we focus on Ichimoku for options. That's the one we've traded the longest. We have the most stats for it. It works so well. This is the one you've seen me present for tops and for SVOG many times in the past. There's a video, a couple of videos have been recorded online that Joe did, that those are still online. So these are the ones that we've been trading forever. But it's for options only. Okay, up to now, do we have any questions? Anything at all? I'm going to go back to the handout. Anything, any questions? All right, so I'm going to change the share. I want to show you how money is actually made now. Trades. Okay. Some of you have seen this. One of the guys I work with, and these type of numbers haven't changed over the years. It's the same type of thing you're going to see consistently. One of the guys I was working with, he was so proud of his trading results after working with these strategies for several months. He actually did a presentation with me and used his actual real life trades during the presentation. These are his live trades, real trades. There is a video of his presentation that's recorded somewhere online also. But this was a listing of his trades over 7 months. And so what was good about showing this is this column right here where he shows his percent return on trades. He risked approximately $1,000 per trade, and per long trade, and between $500 and $1,000 on short trades with puts. With 100 grand accounts, is 1% account risk approximately. Max 2 to 3%. So we're going to go through the numbers and then show you what 2% would be, 3% would be. If you have disproportionate risk on trades, you can never predict how much you're going to make. If you're lucky, you might make money or not. You have to risk approximately the same amount on every trade. If you're going to risk $1,000 a trade, you risk approximately 1,000 on every trade. Okay, you don't risk 1,000 on one trade, 3,000 on the next, 2,000 on the next, 300 on the next. It doesn't work, because as soon as you get a loss on the one where you risk $2,000, how are you going to make it back with the one with a win on the one where you risk like 500? It doesn't work. The numbers do not work out in your favor. Okay, so you have to keep your risk approximately the same on every trade. So let's go to some of his trades here and the percent returns. And something to think about: you don't get to dictate to the market how much you are going to make. The market will dictate to you how much you're going to make. You don't tell the market anything. The market, you just follow your plan, you follow your rules, and money comes. But you don't know how much it'll be. You cannot tell the market what you're going to make. It will give you whatever it is. If it's meant to be a 3% return, it'll be a 3% return. If it's meant to be an 80% return, it'll be an 80% return. If it's meant to be a negative 10% loss, which is like nothing, it'll be negative 10%. You don't control that. All you do is follow the process and money comes. All right, so our trade management hasn't changed in, I don't know how many, probably 12, 13, 14, in the last 15 years, our trade management really hasn't changed. So we follow the same trade, no matter what strategy we trade, the trade management stays the same, okay, for options. So we know the trade management works as long as we maintain over 84% wins. It's the same, okay? So these are all the standard trades. He always tries to trade more than one contract whenever possible. Always tries to be more than one contract so that you can trail stops. He did a pretty decent job, but I want you to see the percent returns. And no, it can vary. You got a 3-something% return here and a 30-something% return on this one. Whatever the outcome is meant to be, it will be. What I see people trying to do, oh, well, I'm only up 3%. I want to hold it a little bit longer. Like, okay, you have just disregarded your plan, you've disregarded everything, and you have imposed your own will over something that's 100% objective. That is why we put in our targets and stops, so that to save us from ourselves, so that we don't try to make silly decisions in real time, because when it comes to trading and money, we tend to make the wrong decision. So by putting in your targets and stops and everything, it's predefined, and it will take you out of the trade at the appropriate time. In real life, it could have hit your stop and keep going. So what? You're out of the trade, you booked your profits, you made your money, you move on with your life. Next trade. All right. All right. So let's take a look at some more of the numbers over 7 months of trading. 1.2%. I like this 1.2%. Okay. That is what the market was meant to be. That's what it is. If the trade is meant to give you a 1.2% return, that's what it'll be. You follow the rules. This is money that adds up. Other people would be like, well, I want to try to get at least 5%. As this goes more and more negative, more and more negative, more and more negative, until they have a full loss. That's what happens. Oh, I'm a little bit negative, I want to wait till and it never comes back. I know people who are on the meetup right now who've been in that situation where they made a mistake and they were down a little bit, and they figured, okay, I'm going to hold it. I'm down a couple $100. I'm going to hold it till it comes back positive, then I'll get out. I know those people know what I'm talking about. If they want to chime up and say something, they're welcome to. But it never came back fully. And next thing you know, you turn a 10% loss into 100% loss. If only you just followed the rules, you would have a 10% loss, but instead you made it 10 times worse. Okay, that's why you follow the rules. All right, does anyone want to admit they've done that? Wait and see. Anyone want to confess they've done that? Gotten into a trade they weren't supposed to be in and kept waiting for it to come back prior to getting out? Okay, a lot of quiet people, but I know you're on here and I know who's done it. So, all right. Few more trades. Same. You see very few losers, right? Okay, I'll show you our trade listing recently. This is what it looks like. This is how the numbers add up. It's basically 10 to 15 trades a month is ideal. And the numbers just add up. Very, very few losses when you are at 80-something% wins. And some of the best time to trade is coming up real soon. October through December is the best time to trade, because we have trends that happen during that time. 100% loss, big deal. That represented 1% of the account. You control the risk, the wins will take care of themselves. The numbers just keep adding up, adding up, adding up. Little bits of money add up as opposed to turning a little bit into a loss. It just adds up. So let's look at the bottom line. So after 7 months, it was 18,000. Net profit was $17,000. That was a 1% account risk. I recommend 2 to 3%. If it was 2%, it would be 35,000. Okay. If it was 3%, it'd be 35, 45, 50,000, or whatever the number is. 35, 40, around 50,000. Reality kicks in eventually. You will have some losses. When it was all said and done, his P&L was about a 6-to-1 return. Okay, when it was all normalized at the end, so that was $6 made for every $1 loss was its final number. 6-to-1 return. And that is just consistency. So he learned from consistency that what works is follow the rules, do it the way I tell you to do it. Don't try to make up your own rules. This is meant to work with a certain way, with a certain set of rules. And that's our approach. If you want to make up your own rules and do something, that's okay. But it will not be this strategy, and it will not work out the same way. Because when you change the rules, you change the outcome. And if you're willing to do the background work, to do the stats and get the numbers, then you will, then that's no problem. But we know this works for, and as I showed you on the stats before, we know which ETFs to trade, which ones to not trade, because some of them, there's no expectation of profitability over time. You may have a good trade. Even at 70%, you're going to have 7 wins for every 1 loss, right? Excuse me, 7 wins for every 3 losses. But you still might get 3 losses. And you still really need to have 5 to 7 wins for every 1 loss to guarantee net profitability when you do all the math, okay? You really want to have 5 to 7 wins for every 1 loss. That's our goal. That's 87% wins. We usually average 85 to 87% winning trades, so it works out pretty okay. It's very rare that if you follow the rules, you have a losing year trading options without strategies, unless you mess up. I know people mess up. That's part of the learning curve. So that's okay. You will make mistakes. You just try to, but when you make a mistake, get out of the trade, fix it fast. You might take a small loss, but not a big loss. Don't take a full loss for no good reason. If you mess up, get out, fix it. Now, any questions so far on anything whatsoever? Feel free to unmute or type it in. Could be on anything. All right. So I'm going to switch back to this. So today we just focus on one strategy. That's the ETF strategy. With the Kumo buy. Gave you an example in the handout, which you're looking at right now. This is on IWM. And a couple of spreadsheets. I want you to understand how we maintain the numbers and know what to trade. These are all the Kumo trades in IWM going back to 2002, long and short. So the same setup long is the exact same setup short, just flipped over. Okay. We have a total number of trades here. And 88% wins overall. If you for one ATR target, if you go for a slightly bigger target, that's 50 cents bigger, that's 50% bigger. Look at how much the win-loss stats drop. You went from making real good money to losing good money because you're going to take up many extra losses by not knowing your numbers. This is a business. If you don't know your numbers, your business will not be profitable. There's a very, very fine line between making money and losing money. In the example we went over where the target was $4.60, if you had made that target $6, that's because you said so, because you felt like it. We don't do feelings. You need the numbers to back it up. That could have dropped your 88%, 90% wins down to 70-something% wins because you pick up more losses. The bigger you make your profit objective, the less realistically that it will get there before option expiration. Okay, so we learned to do targets from Daniel. Becky, what's his last name? I'm blanking his last name. Daniel. Becky, what's his last name? Daniel. Fill it in for me. Daniel Gramza, Gramza. He's the one we learned how to do targets from and how to calculate the size targets. When I saw him a couple of years ago, it was at a convention in Santa Clara. I told him we'd been doing what he said at a presentation, and that's how we've been doing targets. It's been super successful. And he was really shocked because it takes so much time, work, and effort to determine that a 1 ATR target is better than a 1/2 ATR target, so on and so forth. He says no one actually does it because it works really well, but no one puts forth the time and effort to do it, to do that work. So we did the work, and we know it works. And we put in many, many, many thousands of hours developing this and trading it. So we know it works. All right. Was the name Gramza. So Daniel Gramza, Gramza. So that's the name, Olga. So what we see here at a 1 ATR target, long and short, 1 is a win, 0 is a loss. As you see, as we get to a bigger target, a lot more zeros, and even bigger target, even more zeros. Okay. So on the long side, we have 92% winning trades. You're going to find this common with many of the strategies. Don't assume trading long is the same as trading short. With this strategy, if I was going to go long, I would go with a 1 ATR target because that has the highest win percentage. Okay, this is common with many of the ETFs. You see similar numbers. I would be going with a 1 ATR target. I would not go with a 1.5 ATR target, and definitely not a 2. You have the numbers. So when we give you the trading plan, you have the stats. Short trades, much lower percentage. Just look at this. You basically guaranteed to not make money. And I'll show you an even worse example. 83 is close, but we would not take any short trades with this strategy because the numbers don't back it up. Got to know your numbers. When this strategy becomes valid, long trades only, because the numbers show that here, that's where we make money, on the long side with this strategy, not the short side. Okay. I have another example in here of XOP, that's oil. If all you look at with the total trade, see 80%. In other people's worlds, wow, 80%, that's great. Not in our world. In our world, it means we didn't work hard enough to get the numbers up high enough. We didn't think it through. And then you introduce that luck element. We don't do luck, we do numbers. The long side is where we make our money. You are guaranteed to give back all your profits you made on the long side by trading the short side with this strategy. Trade the short side, you're guaranteed to lose money. Trade the long side consistently, you're guaranteed to make money if you follow the rules. Do stuff randomly, arbitrarily, pick the wrong strikes for whatever reason, or wrong expiration, it won't work. If you follow the rules, this has been very consistent year after year after year, okay? So once again, we give you this so you know to this strategy, only use it on the long side. There are some that are good long and short, but if you don't have the numbers to back it up, you don't do it. This is how we make money. This is how we've consistently made money with options, by having the numbers, by maintaining these stats. And we have available updates every quarterly, every 3 to 4 months. If you want those, that's available. Some people choose to maintain stats on their own. That's okay too. But we do have them available, but it's long and short. All these ones and zeros and rectangular boxes, Becky does these. She maintains all of this for every ETF, for every strategy, for every futures strategy, for every stock strategy, for every ETF share strategy, for every Forex strategy. And there's a whole lot more strategies that we have that even the people I'm coaching haven't seen, that she maintains, okay? And we still do analysis almost every day, and we're constantly trying to improve our existing trade. It's an ongoing process. How can we get better? I don't believe in settling. I believe there's always a way to make more money, to make things more efficient. How do we make our futures trades better? How do we get more of this? That's an ongoing process for me personally. I don't settle. I love doing analysis. I spend probably still at least 10 hours a week, maybe more, just doing technical analysis to try to improve on what we already have. What we have works really well, but there's always a way to make things better. I'm always looking for ways to make things better. So, all right. So, any questions so far on anything? How we approach trading, the strategy itself. For my current coaching clients, if you want the details and all the stats, just email me and I'll send it to you, everything in detail that we currently have updated. Some of you don't have the Kumo or the Senku, but just let me know. I'll see about updating that for you. All right. So this is what we do if you're interested in learning to trade the strategies for the options coaching. We do 6 daily chart strategies. That was in the light blue in that document I showed you with all different strategies, where everything in light blue over 84%. Those are these 6 strategies. And we basically provide these to you, and then we go over the strategies in detail. So you understand that there are only 2 charts involved. And it's during the review, you can write a scan for it if you want to find opportunities, or do it manually. It's not a big deal manually, because all you're literally doing is looking for 2 lines crossing usually, or close above or close below something. So it's really not a big deal. Once you have something visual to look at, then you go in and do more detailed review to make sure all the setup and trigger and everything is good. But if you look at DIA, 2 lines in cross, okay, next. Look at QQQ, 2 lines in cross, next. Look at EEM, 2 lines in cross, next. Look at GDX, 2 lines crossed. Let me stop and look at that one now. That's basically, it goes really fast. And I also make available, I send out a listing of trade candidates each day with filtered down list of what might be valid. And then up to you to go and do the detailed review on your own. But we filter it down for you to make life a little bit easier. People have been requesting for me to do that for a while, so I finally started doing that a little while ago. So that's an option for people if they want to do that. I would really like to do a monthly review of your trades with you, especially losses. We need to make sure if you have a losing trade, it was a valid loss. Let's see, I'm seeing who's on the meetup right now, because there was a situation that came up, and there was a bad execution, and but you don't know it's a bad execution until you question it. I'm going to go to my options page on my website. I want to have you take a look at something that came up just a couple of weeks ago. And let's see, Q charts. Delete, yeah. There it is. Okay, this is my option group. So people I'm coaching will have access to the group. Let's see. This is, there it is. Okay, this is from Jason. And he had a really bad execution on some puts, really bad execution. And he was like, it was just impossible. And he had to follow up with it with the broker, and it took a few phone calls. And this, take a look at 1, 2, and 3. Let's go ahead and read it. 1, 2, and 3, so you can zoom in some more even. But the type of thing happens. And let me close that. Okay, read 1, 2, and 3. I'll give you another minute, another few seconds, 30 seconds. And this is the type of thing, stuff happens like this, and it's really up to you to be aware that something is wrong, okay? Especially on losing trades, because somehow bad trades only happen against you for some odd reason. They never happen in your favor, although that did happen to myself and Becky once when we first started trading. There was a glitch, and our like $1,000 options was suddenly worth $60,000 that was great. I wanted to push a button to withdraw the money right away, but I figured maybe we should wait. And so we did, and they busted the trade. They said later on, it was a glitch and you can't keep the money. But it never goes the other way. When you lose money, they don't tell you. You have to know that there was a problem. You have to call and question a bad execution. And you don't know you had a bad execution if you don't look at your trades on a regular basis, okay? So I've talked to people this past year where we look back at the trades from months ago because they didn't talk to me every month. So I'm like, how's trades been going? And they're like, that's a really bad thing. We even stopped trading for a while because we didn't like the way things were. I'm like, let's take a look at it. Because they thought the strategies weren't working. So I'm like, what? We didn't have any losses back then. So let's take a look at it. And we found out they had trades that didn't execute. They had trades that should have been winners that did not execute. And the brokers basically said, we need to look at that within 30 days. Within 30 days, because they can't go back much beyond that to see what really happened. Maybe you entered your order incorrectly, okay? Maybe there wasn't a problem with the exchange. Maybe there was a bad executions happen all the time, but you have to deal with it in a very timely manner. So you need to pay attention to your trades and make sure things look right. If the thing's off, contact me. We'll take a look at it together and see if it's worth following up on. If it is, you call the broker and see. But you need to have your ducks in a row. You need to have things documented. And when something isn't right, it's usually not right. Okay, but it's up to you to be aware of that. Just like with this situation, right? Any question? I see. Sehar, is this your only tool you use for technical analysis? You don't combine other tools like Elliott? If you can name it a type of analysis, we've done it. Been there, done that. Elliott Wave. We have Elliott Wave strategies. They work extremely well, but I can't show that to anyone else because you don't have the tools no one has the tools to do it. I use Profit Source. Profit Source has Elliott Wave built in. It costs several $1,000s just for the software package. I can't show that to anyone. That's within our reality. You name it, GAN analysis, multiple GAN tools we've used. I can't show it to anyone else because it's number one, it's too complicated, and it's all within Profit Source also. So, but yeah, you name it, we've used it. So our focus has been in the last couple of years for options has been using the Donchian channel and Ichimoku. Donchian and Ichimoku. So between futures and options, Donchian, Ichimoku, and trigger lines. Those are the three main things we use for analysis in some combination with each other. Ichimoku, Donchian channel, and trigger lines. Those are our three main things. We work in various combinations along with the squeeze indicator. And between those and different combinations, different way we use each one, that's what we use. So of all the thousands and thousands of ways we've looked at it, literally, that's what we've settled into a certain grouping of strategies, which we do on a regular basis. So we use Profit Source. We use Profit Source for running scans on the Ichimoku and some other things that we can run scans on. We've been using that as a scanning tool for many years. So some of our weekly chart strategies we use to scan for, and also for all the Ichimoku strategies, we use Profit Source for scans. Other than that, you would have to develop your own on TOS or some other platform which you might be using. All right, so going back to handout. Like I said, if you want to work with me, the cost is $1,750 minus $100 to anyone on the meetup. I really would like to do a monthly review with you, and I can work with you either via Zoom or in person. If you're in the Bay Area and you want to come to the South Bay, I will meet with you in person in the South Bay, which is what I prefer, actually, if at all possible, is in person. And we will really get into it. If you already have some experience trading options, you're not a total newbie, this is the deal for you. If you are brand new, know nothing, absolutely nothing at all, nothing, don't know how to do charts, analysis, nothing at all, need help with everything, then we have to do this package where I will basically be helping you with everything. I will help you get the account set up. I will help you install the platform, get everything running, hold your hand through everything, including the first trade. The whole deal will be, you know, and this goes beyond just the daily chart strategies. We also do the market internals and the weekly chart strategies. So everything is included. There's a more long-term deal where you can start with the daily strategies, but then eventually we transition into the weekly deals and maybe also the market internals if you're interested in that. Is the 28 ETFs once again, but this is much more focused on either the experienced trader who just wants everything, or the beginner trader who I really have to spend a lot more time with to get them going, because I will be literally online with you as you place your first trade to make sure everything is set up right. The trades you place will not be the same trade someone else places, okay? Your trades will be based on you, your time available when you wake up, your mood, your feelings will be factored in as to how you trade, your financial situation, how big your account is. So like I said, someone with a 10 grand account will not be placing the same trades as someone with a 50 grand account, and they will not be placing the same trades as someone with a 100 grand account. So, and also someone who has a family, children, has to pay for school, has to pay a mortgage, has to pay for all these things that go along with a family, will not be making the same decisions and placing the same trades as someone who's a single software engineer making 150,000 bucks a year and they have no other responsibilities, okay, except themselves. So everyone is different. Everyone trades differently based upon their own realities. So that's why I like to work one-on-one with people to fine tune everything to you, how we do it, how we approach things, right? So if anyone's interested in this, it's all one-on-one. Just contact me before the week is over and I'll give you $100 discount over $1,750, $650. And if you want the full package, I will take $500 off this price if you let me know by the end of the week. And that's going to be, this will take several months to implement. If you're doing the daily chart options, I want you to, we can be trading within a week or two, getting some live trades placed. The full options program will start with daily and then we'll incorporate weekly and internals later on. But this takes this is a more longer term, over the next 6 months type of thing to get fully implemented, because we want to focus on daily right now because October is coming up. We want to be ready for September, October timeframe, end of year. We have the biggest, best trends at the end of the year. And that's when we get the best trades. It doesn't matter if it's up or down, bullish or bearish. We have nice trends at the end of the year. So we will want to capitalize on that as much as possible. But I think I gave you a good feel for how much money is to be made by seeing the spreadsheet from that one person did. It's really the same. There's a listing, show you a quick listing of it's on the website also, so you can take a look at it. There's this listing here. These are the trades that have been valid right through the end of July. So you can go through and take a look at that. All the wins and losses are all on there, the different strategies, win or loss status, and that is on my website. So, but this is what you place trades like this, and they will look like that spreadsheet from the guy who did these trades. This is literally what it'll look like. It's the same type of thing. Very consistent, book profits, book profits, book profits, because eventually you have losses. So you want to be booking profits as much as you can, because eventually you will have a few losses, then you start booking massive profits again, and just keep that going. All right, all different sectors, but this is what it looks like right now. It's been an awesome month of trading, especially on the long side recently, as you can see, just long this last couple of weeks. So unless there's any questions, we're going to see about wrapping it up. Do we have any questions at all on anything whatsoever? It could be on what we did today or not on what we did. All right, then we're gonna probably do our, okay, you got my question, which is it? Which is your question? Okay, so I'm gonna send you some of the documentation. If you take a, for the person about the documentation, look at the link I just put into the chat window, and that's where all the handouts are and spreadsheets. And what's the difference between market internals and weekly? The market internals, Olga, is a sentiment indicator. It is not something you will see on a chart. It's published by the CBOE each day that tells you all the volume of puts and calls traded each day. And we use that sentiment of the total volume of puts and calls which have been traded in conjunction with buy and sell signals. So if we see an unusual level of option activity, right at the same time we're seeing one of our technical buy signals, that is an indication that those in the know are doing something right at the same time that we think it should be a buy. There's also a whole lot of option activity at the exact same time. So something is going to happen, and it will most likely be in the direction of our buy signal. So we use the CBOE put call sentiment indicator, the put call ratio, in conjunction with our technical signals to give us our buy and sell signals. So that is the deal with the put call. The weekly is just a weekly chart. Instead of a daily chart, it's a weekly chart. So instead of looking at signals every day, you look at it once a week. So that's the weekly chart. And this year, the weekly chart's been like awesome. The weekly chart trades have been, I'm not even sure we had a loss this year. It's been so good. So we had a lot of great weekly charts trades this past year. And it came back to you. I know we've gone over it, but I'm not sure if you traded it, the market internals. All right, I'm going to go ahead and wrap it up, and we'll probably do another meetup probably the end of August or beginning of September, probably the weekend after Labor Day, most likely. So we'll either do one end of August or the weekend after Labor Day weekend. If you need to reach me, email me, call me. Information is on the handout. It's on my website, behindscenes.com. All the details about the programs are on the handouts, which you can get from the link, and it's all on my website. And if you want to work with me, let me know. This is a great time because you want to be ready for September, October timeframe when we see the biggest moves. Other than that, see you guys in a couple of weeks.